The Lottery Ticket Trap: Why the Poor Fund the Dream, and the Mathematics of Hope. Before we get started, make sure to like this video and subscribe to the channel so you don't miss any new content. At 6:12 every morning, the corner shop on a tired high street fills with regulars: builders in dusty boots, a nurse coming off the night shift, a delivery driver clutching a thermos. Between coffee and cigarettes, many of them add one more item to the counter: a brightly colored lottery ticket. For a few pounds, they purchase something far more powerful than paper. They buy hope. Across the United Kingdom and the United States, studies consistently show that lower-income households spend a larger percentage of their income on lottery tickets than wealthier households. In some low-income neighborhoods, lottery sales per capita are several times higher than in affluent areas. It is not because poorer people misunderstand money. It is because they understand scarcity. When your income barely covers rent, food, and transport, traditional paths to wealth feel closed. Investing requires surplus cash. Starting a business requires capital. Higher education requires time and money. The lottery, however, requires neither. It offers a life-changing outcome for the price of lunch. But hope has mathematics behind it. Consider a typical large jackpot lottery. The odds of winning the grand prize are often around 1 in 45 million. To understand that number, imagine filling a football stadium with 45 million identical seats and marking only one as the winner. Buying a ticket is choosing a single seat in that vast arena. Now consider the expected value. If a jackpot is £10 million and the odds are 1 in 45 million, the raw expected value of the jackpot portion alone is roughly 22 pence per £1 ticket before taxes and before accounting for smaller prizes. After operating costs, profit margins, and the fact that jackpots are often shared among multiple winners, the expected value typically drops well below the ticket price. In financial terms, the lottery is a negative expected value investment. And yet, millions continue to play. Behavioral economics helps explain why. When people face limited upward mobility, their decision-making shifts. Researchers call this risk-seeking in losses. When life feels like it is already operating at a deficit, high-risk, high-reward choices become psychologically appealing. The lottery is not competing with stock portfolios. It is competing with stagnation. There is also the availability bias. We see headlines of winners holding oversized checks. We do not see the millions of losing tickets. Our brains overweight vivid success stories and underweight silent failure. Then there's the mental accounting effect. A £5 lottery ticket does not feel like a serious financial decision. It feels like entertainment, a small indulgence, a ritual. The cost is easy to ignore because it is fragmented, but £5 a week becomes £260 per year. Over 10 years, that's £2,600, without accounting for compound growth had it been invested. At a modest 7% annual return, that same money could grow to over £3,600 in a decade. The lottery is often described as a tax on the poor. That phrase is controversial, but the data is uncomfortable. Governments generate billions in revenue from lottery sales, and a disproportionate share comes from lower-income communities. While funds often support public programs, the burden of contribution is uneven. Yet, dismissing lottery buyers as irrational misses something important. Hope has value. For someone working 2 jobs with no financial cushion, the fantasy of escape may provide emotional relief. For a brief moment, bills disappear in imagination, debt dissolves, a different future feels possible. The real trap is not the ticket itself, it is when hope replaces strategy. Financial mobility rarely arrives in a single windfall. It is usually built through steady habits, emergency savings, skill development, diversified investing, controlled debt, and patience. These methods lack glamour. They do not create headlines, but mathematically, they work. The tragedy is not that people dream. The tragedy is when the only visible path upward is a 1 in 45 million chance. Hope is powerful, but when it is sold at retail prices, the house almost always wins. The mathematics is clear. The question is whether we will build systems and mindsets where hope no longer depends on luck.